Welcome to today's session, everybody. In today's session, we're going to be backtesting Usdjpy and gold. I've picked today to backtest two different pairs because we don't really trade them that much. If I'm frank, I don't really take trades on gold even when I see opportunities. The reason for that is because in the past year, let me show you all something. In the past year, for the past year and a half, if you will, the best or the top performing pairs were USDJPY, EURUSD, EUROJPY, GBPUSD, and CADJPY. These were their returns. So at the beginning of this year, I was like, I'm going to drop every pair that I'm trading and just stick with the 5 best performing pairs. So gold was not in the top 5, that's why I never trade it. I just analyze it because a lot of people love me to do analysis on it because they trade it. So I always do it just for others, you know, but I never trade it. So today I'm just going to be back testing it again, as I said, just for you guys, but I never trade it. And USDJPY, I'm going to back test it because we do trade it. However, in the past 3 months, we only had 2 trades on USDJPY. Now that's crazy. That's crazy because we only had 2 trading opportunities on USDJPY. And which both of them we lost. So for the past 3 months, USDJPY had a 0% win rate and a negative 2%, loss or ratio, 2R, negative 2R. But I can't say that I'm going to stop trading it because if you look at the back test for the past year and a half, actually, it is the 3rd best performing pair. It outperforms EUROJPY and it outperforms GBPUSD. It has a 29% return on risk, right? So it's not a bad pair. It's actually very good. So I'm not going to drop it. I'm just going to rather look at it and see what we can actually improve on the pair and see if maybe we can actually be looking for more trading opportunities in it. So that's what we're going to be doing. Okay, so for the past 3 months, we started June. We're going to start trading it on June, somewhere here. We're going to be doing a bar replay. So today, since we're going to be doing 2 pairs, I'm just going to keep it steady and fast. So we started June right there. So that is where June started. So we need to go back and look at what the month was saying. Excuse me, not 3 months, the month, the past month, what was prices saying? Okay, so if we look at the prices, we can see that prices are in a clear uptrend, right? So prices had a low, had a high, had a higher low, higher high. So that means prices have a very high possibility to keep on pushing higher, obviously, and we can see this as the most recent market structure, or we can call it support. So where prices were at, we should have anticipated to see, okay, so prices, this would have been considered as some kind of a retest. Let's see if it will actually align with some kind of a Fibonacci, maybe 0.3. Maybe 0.38. No, it didn't align with that. 0.5, it aligned with it. Okay. So it aligned with the 0.5 Fibonacci key level, indicating that prices did retest this structure and are now looking to push higher. So from the monthly perspective, we had this bias that USDJPY was going to continue being bullish because the trend is bullish and the structure is very much bullish. And then if we went to the weekly perspective, let us zoom in. We can obviously see that prices had already broken above here. And this indicates that prices still have a very high possibility to keep on pushing higher. Obviously, with the current market structures, we should have been anticipating to see prices maybe give us a retest and then continue pushing until somewhere there. That's the very least. So this is what I would have been anticipating at the beginning of June, and to see how the month will play out. So let's go to the daily. Obviously you can see the daily had already started tracing. So again, we just draw the daily structure here and see how it will play out. So we need that retest to see prices push until they reach about 148, right? 148, something like that. So let's play on. Oof, okay, nice. Okay, so now that we have already seen that, we see that, okay, prices retraced here, and then they gave us this solid bullish engulfing candlestick. And where did it form? It actually formed on this market structure right here. So this is an indication that prices might take off from here without giving us a retest on this support that we're expecting it to. So we need to look on the 4 hours and see if this trend has already changed from bearish to bullish. Because if the trend changes from bearish to bullish, that means the structure has changed and prices will now begin being bullish. So okay, so this was the most recent low, prices most recent high, prices created a higher high. So if prices give us a higher low, that means the trend has already begun and we need to be looking for entries. Okay, looks like prices are pushing lower, they're losing momentum, but pushing lower, pushing lower, pushing lower. Okay, now we have a, what do you call this, a bullish engulfing. A bullish engulfing formed here, right? But we couldn't take the trade. Now prices are forming again. Okay, massive rejection. Okay, so now prices have broken above this high, so that means the trend has begun to change. So now we'll be looking for some kind of a retracement here if we're going to be looking for a buy. So we were first expecting to see prices push lower until, okay, somewhere here, I think it was on the daily, so somewhere here at about 138, but prices are indicating that they are trying to push higher. So if you look at the daily, look at this, you had a solid bullish engulfing, you had an inside bearish candle, a doji, and now a bullish engulfing forming a morning star. This is an indication that the bulls are now in control. So we need to start looking for buys. We need to start looking for buys because the structure and the trend has already changed. Prices have been rejected off the trend line, pushing lower, pushing lower, pushing lower. Will they break below here? That's what I want to know. They didn't break. So you can notice we didn't take the trade. Prices gave us a confirmation, but we didn't get the entry confirmation. That's why we didn't take the trade. Never act on impulse. Always wait for the solid confirmations, then you pull the trigger. Because if you're acting out of impulse, you see here, this was another false breakout. Wait, let me pause. Okay. So this was another false breakout. So if you acted out of on impulse, you would have been stopped out of a you would have been stopped out of a trade. Now you see here prices came back, pushed higher. Now you see after all this crazy impulsive move, then you can actually be sure, okay, the structure has now clearly been broken. So now you can be waiting for a retest somewhere here to actually take your trade, because prices have broken out of this range. Because if you look from a bigger picture, you can see that prices were just ranging here. They weren't really trending. So now these prices have broken out of the range, and if they give us a retest here, we can actually take a trade. Okay, so prices have come back there. Oof. Okay, so you see how they're acting. So they came back on this structure here, pumped back down here, and then gave us that is the confirmation candlestick. So that's on the 4 hour. So let's remove this last candle. That's on the 4 hour, right? So that means the 4 hour gives you a confirmation The daily already gave us a confirmation bias. As you can see here, this had already given us all the confirmations we need, right? After breaking above this structure. So on the 4 hours, this acted as the confirmation. So that means on the 1 hour, you just look for your entry confirmations. Okay, so prices were rejected off here, closed up there. So you can still use this same 1 hour candle as your entry confirmation. So it will have closed, the 4 hour will have closed while this was here. So for me, I would have placed my trade there. Let me see if it gives me the right amount of pips, because sometimes you don't have to risk a lot. Because if you're risking a lot, it doesn't really make sense. You'll be risking 73 pips. 73 to make. Okay, so the reward is decent. I'm not gonna lie. The reward is decent because you'll start there and you'll have to push until somewhere up there, giving you 1:13. Look at that, 1:13. Stops would have obviously been somewhere here, which will give you ratio 9. So I'm going to put it there. I'm not going to cover the whole bullish confirmation candlestick. I'm going to scale it on the lower time frames. So if I look at it on the lower time frames, it looks like prices gave us this bullish impulsive move and then retraced to retest these highs, or retest these highs, and it looks like they're going to continue pushing higher. So that's according to the 30-minute. According to the 15, same picture, pump, retracement, and then it looks like prices will keep on pushing higher. So I don't want to see prices come back below this low. I'm going to put a buy stop here, because this, you can see it's kind of a risky entry. So I wouldn't execute. I would put a buy stop here. So if prices start going up, then they'll trigger my entry, but my stop will be somewhere here. And I've also done this because I don't want to risk a lot of pips, because you remember, if we used the confirmation candlestick, this right here, it gave us how many pips? Okay, from this perspective, from the 15-minute, it's about 59 pips. But if we use this one here, it's about 49. So that's more conservative, and I'm going to use that one by even being more conservative and putting a buy stop there. So we're going to enter. Okay, so looks like we've been triggered. Okay, the order has been triggered. A lot of consolidations, a lot of range. Okay, oof, oof, oof. Okay, prices are now pumping higher. Let's switch the time frame to 30 minutes. And we have to understand that once prices reach 1 hour, we need to go break even. We are risking 52 pips. So once prices reach somewhere here, we need to be break even so that we can actually secure our profits. Okay, hold on. So prices until here would have tapped 1 hour and we should be break even. So that means our investment needs to have been secured and looked after. Okay, so that means let's keep on moving. Will we be stopped out? Because looks like some bearish momentum is kicking in. We might be stopped out. Hang on. No, we might survive. We might survive. Whoa. Yo, we might survive, actually. A lot of rejections, though. A lot of rejections. So some crazy rejections. Okay, so we had about 52 pips. So that means 3R will be about 156. I'm going to measure how far 156 pips are. 156, because that's where I want 3R will be. And I always look at the momentum once prices reach 3R. I hate it. Okay, but before we go even further, I hate it when prices, no, not I hate it. For us to actually be more profitable, or for us to have the best returns on our investments, we need to always close our trades at 3R. That's why I'm measuring what will be happening once prices reach 3R. Now, before we actually even talk about what will happen once prices reach 3R, let's talk about what's happening right now. So prices did push up, gave us retracement, came back here, did that, all that. So right now, this acts as a support. So I don't want to see prices push below here. So I'll move my stops from there to here. I don't want to see prices push below this, because if they push below this, that means prices might most likely reverse. So I don't want to give back all of my profit. So if prices do retrace, I want to be stopped out while I've made something. So how much will this be actually? About 51 pips, 52. So it's about 1 hour. So if prices stops us out at 1 hour, I'll be good with that. I don't care. Okay, so looks like a lot of retracements, a lot of range, a lot of consolidations. Looks like the bulls are trying to push higher. The bears won't let them. It's an aggressive war. Okay, so we might have some kind of a trend line here. Did you guys notice this one? So it's crazy. Prices are now just ranging sideways, not really having that. Okay, hold on. Did we tap 3R? No, we didn't. Almost though. We missed it by about a pip. But the good thing is, if you look at the structure, the main trend, you can actually still see that prices are in an uptrend because prices are creating higher highs and higher lows. So the trend is still obviously solid bullish. Now, this will be our next structure. But I'm going to leave my stops here for at 1 hour at the moment, because obviously you can see there's some kind of this crazy bearish momentum. So we might be wicked out if I be fast to move my stops there. So I don't want that to happen. Okay, so the bulls are pushing back up. Okay, so you see what happened. If I moved my stops here, I would have been stopped out, but it looks like even where I'm at, prices might stop me out because the bears are now pumping. Bears are now pumping, almost hit me. And we've been stopped out. We've been stopped out at 1 hour. So with this trade, we would have made 1 hour, but let's see how it will keep on playing out. Will it reach 3 hour? So now prices just kept on dancing, and then started pumping higher again. Now for us, we've already been stopped out of this trade at 1 hour. It's not, it's a small gain, but if you compound a lot of 1 hours, you'll obviously make something. So that's how I'd have taken this trade. So when was this? This was June 23rd. I don't know why we didn't take this trade. Okay, so we only took 2 trades, as I said, on Usdjpy. Now this trade, obviously we didn't take it. I'm not sure if we were in another trade, but if we bring it back to the daily structure, we can obviously see that prices are still crazy bullish. Right now, they were just dancing about because prices had reached this resistance structure. But obviously, prices are still bullish. Now, if prices break above here, obviously we should be anticipating to see them push until it reaches somewhere there. So let's see how it will play out first on the daily, then we can go on the lower time frames to look for entries. Okay, prices have broken above the structure. That's on the daily. It's crazy. That means, Jesus, all this range was insane. So that means this was the next structure. Okay, so I'll be looking for some kind of a retracement for me to get my entries, because as you know, I'm a break and retest. I don't just take trades out of impulsive moves. It's losing momentum. Looks like it's pushing higher. Now it's pushing back up. losing momentum again on this structure, we might be forced to take a trade here. We might be forced to execute right here. Okay, so let's see how it plays out. This is obviously a flag pattern. Let's see where prices will break out. Will it be above or below? A lot of range, a lot of range, a lot of range. Prices are pushing higher. Prices are pushing higher, but obviously it's pushing higher, but in a very, like, look at the way, for example, look at the way this was happening. Like, prices was pushing with an impulsive bullish move. Retracement, impulsive bullish, retracement, impulsive. But look at the way prices are ranging here. Like a bullish candle, bearish candle, bullish candle, bearish candle, bullish, bullish, which are not even that much. A bearish candle, bullish candle, bearish candle, bullish candle, bearish candle, bullish candle, like bearish candle, bullish candle, bearish, bearish, bearish. This isn't a trend. I'm not going to be looking for a trade in such market conditions, because this is mad. Like, for you to take a trade in such market conditions is just way too risky. So I'm not even going to be looking for an opportunity there until prices break out of this. You need to trade in a market that's ranging, that's trending, not ranging. In a ranging market, you're just setting yourself up for failure. I think that's why I never even took a lot of trades in this pair, because of a lot of ranges like this. So we have this as our new low right now. Looks like prices have broken below that. Okay. Given us a retest, closed with a doji. What should we be anticipating next? Obviously, so prices broke out of this range and then gave us this sideways range, broke below this low, gave us that, closed with a doji. If we get a bearish confirmation candlestick, we should be looking to take sell opportunities. But before we even look for that, we need to see how the daily is set up, because okay, the daily looks the daily looks clean. It's a bearish engulfing candlestick, so that means we have probable trading opportunities for us to sell until prices reach here before we go all the way up there, because at the end of the day we are still bullish biased. So let's see if we can actually get these bearish opportunities until somewhere here. Are we going to get that confirmation candlestick? There it is. It closed again with a doji. Nah, that's not our confirmation. Okay, there it is. So after getting our confirmation candlestick, we go to the 1 hour to look for entries. Okay, so prices have to break below here and give us a retest. Okay, so prices are just pumping. This is the most recent low, so we need to be looking for possible retests somewhere here or here. Okay, so prices are just dumping. Jesus Christ. All the way until where we anticipated them to reach. And we haven't gotten an entry opportunity. So that's messed up. So as we did yesterday, and as we did with Euro USD the day before yesterday, we need to know what we can change in order for us to catch such a move. Because at the end of the day, we anticipated prices were going to sell, and they did sell. So we need to know what can we do in order for us to catch this move, because we took only 2 trades in this pair. We need to know how we can actually get more trades, and not just more trades, but more winning trades, because we anticipated this move, but we didn't take it. So how are we going to set ourselves up for winning next time such a scenario exists? So obviously, we need to go back again from the daily. We need to know what's up, because we can't just be sitting on the sidelines. When a person asks you, you say, yes, I know it was going to sell, but you didn't take the sell. What's that? Like, that's just madman talk. So, okay, again, back from the top. Okay, so we already saw from the daily, we have our confirmation. Prices on the 4-hour already changed the structure. It already gave us a break and retest. So could we have taken this entry right now? No. Why not? Because we still don't have a confirmation candlestick. Okay, so let's wait for a confirmation candlestick. There we are. So that's our confirmation candlestick. So we have a structure, a break, and a retest, plus the confirmation candlestick that has already engulfed and closed below this bullish candlestick. So this right here should have been our confirmation candlestick. Now, if we look at it from a 1-hour perspective, because our entries will need to take them from the 1-hour. That's the most recent low. That's the trend. Let's remove this first. Okay, so that's the structure, that's the trend, that's the 1-hour. Let's check the 30. Okay, so it looks like the 30 did break and then pump low. All right, so here's the thing. Look at this trend here. Prices were creating an uptrend, right? When they were going back to retest. So they created this kind of an uptrend where they reached up here and they gave the retest. And then they pumped lower, created a low, lower high, lower low, a retest of the retest. So that means if we went on the 30 minutes, we could have gotten a potential entry trading opportunity. And we wouldn't have taken it here. We should have taken it after this candle was formed. And the reason being, it's because this is the candle that engulfed this bullish candlestick. So that means our entry should have been there and our stops should have been above this high, because obviously it's on the 30 minutes. So we would have been risking $22 pips. So that means once it reached about 26 pips on this next market structure, we should have been break even. Because as I told you guys, remember, there are a couple of ways you can go break even. The first way is going break even when prices reach 1:1. The other way is when prices reach a market structure. And most of the times, you need to make sure that before prices reach another market structure, the trade that you've taken need to be already at 1:1, because if they reach a market structure and your trade is not yet at 1:1, that means you won't be break even. And if prices reach a market structure, there are possibilities that the trade might reverse. So that means you'll be setting yourself up for a high risk to be stopped out of the trade. So in this scenario, we're risking 22 pips and it's 26 pips away from the next market structure. So that means there's a very high possibility we'll already be at break even. So that's nice. Now, once we go back to the 4 hours, we can notice that this was the candlestick that was used as the entry. And then it gives us a 1:6.9. Ratio 6.9. So once we go back again to the 30 minute, because we'll be managing it obviously from the lower time frames. Once you play the trade, prices just dumped. We should have been break even by then. So again, it's the same scenario such as Euro USD and Euro JPY yesterday. We already had the confirmation from the daily and the 4 hours. So once it's reached on the 1 hour and the 30 minutes to take the trade, we had to be aggressive in order to catch the move. So again, that's something that we need to actually implement in our strategy, because on Euro USD we missed a trade such as this, on Euro JPY we missed a trade such as this. USD JPY again, a beautiful trade, 1:6.9. We didn't catch it because we were waiting for some kind of a retest on the lower time frames, while we already had a confirmation on the daily and on the 4 hours. So on the lower time frames, we just had to be a little bit aggressive. Not aggressive by breaking our rules, but aggressive by being creative, if you will. Because look at this, it's just the same thing. Prices gave us a low, lower high, lower low. This is a retest. This is the confirmation that engulfed the bullish candlestick. So it's not that we're breaking the rules, it's just we're being creative with it, you know? So it's us being aggressive in a different manner. So that's something that we need to implement in order to catch these big moves that we always see, but we never take advantage of. I think that will actually increase our edge in a way or two. So that's something that we're really going to be implementing in the coming trading months, because we have seen it in all the pairs that we've backtested so far that we never take advantage of. So that's something that's going to change. We're going to be taking advantage of these aggressive entries on the lower time frames. Not by breaking the rules again, as I've said, but by being more conservative, by making sure that we take the trades only when we have already get the confirmations from the daily and the 4 hours. So obviously, as you know me, I gotta know once prices reach 3R, how are they going to be behaving? So in this scenario, 3R will be once prices reach about 66, 67, 70, somewhere there. Let's see how prices will be reacting once they reach here. Okay, very aggressive, very much still having momentum. So if you remember yesterday, I told you I closed the trade at 3R if I see it doesn't have momentum. In this scenario, prices had a very strong momentum, so I might have let it run. Does it hit 88? Most probably I would have closed it somewhere here at 4R at about 88 pips. So that's how I'd have managed this trade. Obviously, I'm a day trader, so I always look for these quick catches. I'm trying to compound the gains, but in this scenario, obviously prices would have went all the way and hit take profit at 1:8, 1:6.9. So this is another trade that we could have caught if we were just a little bit aggressive with it, but unfortunately we didn't take the entry for whatever reason. And even on the 1 hour, guys, even on the 1 hour, you can actually spot this. Look, we had a high, low, higher high, low, lower high, lower low, retest, and then voila, right? Even on the 1 hour, you can actually see it. So yeah, I think we need to be more aggressive on this type of entries where we already had the confirmations on the higher time frames, such as the daily and the 4 hours. Okay, so back on the daily, that means prices would have reached the structure where we are anticipating it to start buying from. But as you can see, prices are still very much bearish, so we need to look at what's the next possible structure where prices might turn around on. So it's obviously somewhere here, so we need to play our own and see where if it will react on that structure. Oof, prices just broke clean, so it pushed all the way to the next market structure again. And guys, so in this scenario, we were anticipating to see prices bounce off from here to keep on buying, but they didn't, kept pushing lower. So in this scenario, if prices break a structure, what does that mean? It's no longer resistance, it's no longer support, it's now resistance. So on the lower time frames, you need to look for sell opportunities. But as you can see in this scenario, prices didn't give even a retest after breaking here. It just clean through. Clean. Imagine this is the 4-hour. Clean. Man. So in a scenario like this, even by being aggressive, we wouldn't have gotten an opportunity because we need to see some kind of a retest. This right here is too straightforward. Like, I wouldn't have caught this move unless I understood, or unless I had a bearish bias from a long time and looked for a sell opportunity somewhere here or there, which was most unlikely because prices from the daily perspective were bullish, because they had this high. You can see they had a low, high, higher low, higher high, higher low, higher high. So that means the trend was bullish. So we should obviously be looking for some kind of a buy on the next broken structure, but it didn't happen. So with that here, even by being aggressive, we wouldn't have caught any move. So sometimes prices like this, we didn't even anticipate this move. So I can't say you may anticipate and not get an entry, but we didn't anticipate this move. So it was just what it was. We can't blame the markets. But in that scenario up there, we did anticipate the move. We should have caught that move. So now back on the daily, let's see if prices will turn around here or if it will keep on being bearish, because I think that's the last structure. Okay, prices have formed a bullish candle, losing momentum. I don't like it. If you form a bullish candle, why are you losing momentum? Okay, so looks like prices are ranging on the lower time frames. Now, should prices break above that, we'll be looking for buys, obviously, because prices will have created a new support structure. And boom, prices have broken above it. Looking for a retest, give me a retest for me to get an entry. We have some kind of a structure. Hold on, pause. We have our confirmation candlestick. So we have a retest, breakout. We have a range, breakout, retest, confirmation candlestick. Where are we looking to take the trade? We are looking to buy until prices reach here, because this is the next resistance structure. How many pips are we risking? About 50. On the 1 hour, about 44. So our long position will be placed there, stops there, go back to the 4 hour, take profit somewhere there, giving us a 1:7 risk to reward. Oof, wahala. Okay. So again, we should have been break even by then, I believe, because we were risking 45. Okay. So prices pushed all the way to 60 pips in our direction. That's over 1.5 hour. So we should have been break even by then. Now let's see if prices will keep going in our favor or will be stopped at break even. We were stopped at break even. Jesus, why were those? Did you see that candle, guys? What happened? Was there a fundamental? It was on Friday. I think the NFP, perhaps. Maybe it was an NFP Friday, because that candle was insane. We got stopped out at break even, by the way. So prices, that's how they opened on Monday. But either way, we are still already out of the trade. And our prices were pushing lower. So we can actually even remove this because we're already out of the trade. But it would have been a break-even trade, so we didn't lose anything. and now prices are pumping lower again. Yeah. So again, it started off in a range. July 23rd. Let's see how the daily is looking. So the daily formed some kind of a double bottom. Do you see this? Some kind of a double bottom and gave us a break above the neckline. So we might be looking for a retest for prices to keep on pushing higher until it reaches somewhere here. So let's see how it goes. Will prices give us a retest? Will prices give us a retest here for them to push higher? I don't know. So let's see. Do we have a retest? Okay. So we do have a retest, and a strong one actually. So prices did give us a retest, and we may be anticipating to see prices pump higher. So we go to the lower time frames. The entry was the 4-hour closed in 1600 hours. So 1600 hours, that's this candle formation right here. So that means prices closed while prices were here, the 4-hour, I mean. So for us to get an entry, we should have considered that. We wouldn't have taken an entry on this candle, probably on this one, because it engulfed the bearish candle. Long position. So we would have been aiming for, okay, so far it's 1:4. I'm not even going to force any more out of it. 1:4, that's a good risk to reward. Let me see what market structure lies before us. If I zoom out, okay, so somewhere here we do have a structure, probably at around where we actually placed our take profit. So okay, let's see how it will play out. Obviously we need to go break even once prices reach 1 hour, about 21, 23, somewhere there, which is probably just around the same height as this one, which is a good thing. Oh, we might be stopped out. Hold on. Prices didn't reach 1 hour. Oof, what's that? Okay, so prices pumped all the way past 1 hour. We are at break even right now. We are at break even. So let's see how it keeps on playing out. Coming, oof, stopped at break even. So yeah, that's what happened. We would have been stopped at break even. But during this retest, so far backtest, we haven't gotten a losing trade, have we? So it's crazy. We only got 2 trading opportunities, but during this backtest, this is like our third or 4th trading opportunity. So it just shows that on Usdjpy, we weren't really focusing on taking trading opportunities on it. So we should be focusing more also on giving it chances and taking trading opportunities with it, because it's clearly one of the best performing pairs that we have. it's right after Euro USD, Euro JPY, then it comes USD JPY. So it's also one of the best performing pairs that we have. So we shouldn't be ignoring trading opportunities from it. So look, like trading opportunities that have been available to us, all of them that we've backtested, so far no loss, right? So that means it's a good trading opportunity that actually resonates with the edge. Like it's a good pair that resonates with our trading strategy. So we should be looking for more trading opportunities with it. So for the coming months, obviously, I'll be giving more opportunities, or I'll be looking for more trading opportunities on USD JPY so that we can actually feast more pips. All right. So obviously, as you can see here, we're already in August. I thought we will be able to backtest also gold, but unfortunately, I don't think we're going to be able to do that today. So we'll have to reschedule it. I'm thinking on Saturday, just so that we can actually finish everything out here. Because if we take another hour to backtest gold, that will be out of schedule. So I don't really like doing that. So gold, we'll have to reschedule it on Saturday perhaps, and that will be that. But regarding USD JPY, it's a beautiful pair that resonates with our trading strategy. Exactly, Federico. I really wasn't focusing on USD JPY, if I'm honest. That's why I said I need to be focusing also on USD JPY, because I wasn't really focusing on it. It's on my watch list, but the pairs that I always look at are mostly Euro USD, Euro JPY, sometimes CAD JPY, because I believe they give me the best returns. USD JPY, if I'm honest, I don't really like taking trades from it, because it has both the USD and the Japanese yen. And you know, in my analysis, I always look at the JPY and the US dollar. So when I look maybe at the US dollar, it's ranging. It's not clear if it's bearish or bullish, but maybe the JPY is trending. I'll be like, okay, the JPY is trending, but the US dollar is not. I'm not sure if it's bullish or bearish. Why would I risk taking a trade on USD JPY while I can take a beautiful trade on maybe Euro JPY or CAD JPY, because it's the JPY that's trending? So that even later on, if the US dollar doesn't go the way I was expecting it, guess what? I wasn't in any trade that was involving the US dollar. So I'll be safe, you know? So that's the reason why I never take a lot of trades with USD JPY. But it has beautiful trades. It resonates with our edge in the market. Yeah, I've not, no, the trades. Let me look at them. So let's backtest these trades that we took and lost. It's not that I didn't see them. Obviously, there are a lot of trades that we've, like, guys, we've backtested so far. We are in August 3rd. That means you just right now in this past hour, we've backtested 2 months. Obviously, we have skipped a lot of trades that we could have also taken, because this backtest is just like, it's a highlight. But if you really sit down and say, let's say I'm dedicating 3 hours to trade only 1 month, you'll find more than 10 trades in 1 month, obviously. But just because here we are just backtesting, it's like we are skim backtesting. It's not deep backtesting, right? It's a lot of trades that we haven't spotted in here. It's a lot of trades in here. So let me look at the trades that we took. USD JPY. The first trade that we took on USD JPY was on, okay, so this is still May. Okay, so this is June 9th. Let's go to June 9th. It was on the 15-minute, June 9th, 15-minute. Fed, don't apologize. Why are you apologizing? You asked the valid question. You are trying to understand more. You don't need to apologize. So it was June 9th, the first trade that we took. Right here. So the trade that we took on Usdjpy was on the 15 minutes, 11:05. Somewhere here. So so I think this was a crazy aggressive trade. I'm not even gonna lie. Long position. We took the trade here. Like, imagine that. After this, we were aiming for a day high. Right? So let's look at it from the daily. All right, so there's our first problem. The daily, yesterday's candle had a strong bearish engulfing candlestick. So we shouldn't have even been thinking of taking a buy there, because yesterday's candle was solid bearish. So why the hell would you look for a buy? That was the first problem. Second problem, look at the trend. Prices here just created a lower low, excuse me. So this is an indication that prices might be creating or might create a lower low. So this is another indication why we shouldn't have been looking for a buy right here. But we did take a buy there on the 15 minutes. So let's look at how it played out. We were risking, so this was just basically a bad trade. We are risking 15 pips. So once prices reached somewhere there, we should have been break even. This is basically just a bad trade. We shouldn't have even thought of it. Prices still didn't. Okay, 16 pips, not bad. We should have been break even because we are risking 15 and it went 16. So still, it was a bad trade, but prices still went in our direction 1 hour. So, okay, you see what happened? So it was a bad trade on top of everything. Secondly, prices still went in our favor 1 hour. So we should have been break even. So this was just being reckless. I'm not sure what was up with me that day. I didn't stick with my plan. I'm going to own up to it. And it led me to being a bad trader, taking unnecessary loss. So this was just being reckless, and this shouldn't happen. So it was a bad trade, and we managed it poorly, and that's why we lost this trade, obviously. So you can see prices just started reversing and ended up pushing lower. It's going to stop us, and it stopped up. So this was just basically a bad trade. I can't blame anybody. I can't say it was a bad trade, and we managed it poorly. So that's on me. It was unnecessary, right? Fed, yes, I do risk differently on the setups, but only on my personal account. On the funded accounts, I don't do that. I don't do that on my funded accounts. Okay, so buy Usdjpy again. The second trade was on June 22nd, June 21st. It was the 1 hour. June 21st. Okay, so it was about 1600 hours. June 21st, 1600 hours. What time frame was this? 1 hour. Yeah, I do get more hours in my personal account than the funded account, because I do risk more on my personal account. It was 16 right here. So the trade we took a buy. We're anticipating to see prices keep on buying, because prices had just bounced off this structure. Like you see, prices came below here, broke, gave us a retest, and then broke an even minor structure and gave us a retest. So I was like, okay, we now have a very high possibility for prices to keep on pushing higher from right here. And as you can see, prices did just dump, took us out, and then took off. So yeah, this happens. So this right here, this was a beautiful trade, I'm not gonna lie. It just is a beautiful trade. We didn't do any mistakes, we didn't be reckless, we weren't reckless, but at the end of the day, the trade just stopped us out. So it's one of those trades. But yeah, so it happens. Can't blame them. Can't blame the markets. It's part of the game. It happens. So that's USDJPY, guys. That's USDJPY. That's the back test. Obviously, we just have understood that we have to be giving more chances to USDJPY because it aligns with our edge in the market and gives us beautiful trading opportunities that we don't want to miss out on. So coming the month, we'll obviously also be focusing more on USDJPY so that we can actually make some money. You know the vibes. So if you have any question, guys, now is your time. Now is your time. If you're watching this from YouTube, be sure to join our Telegram group that's linked in the description. Don't forget to share, subscribe, like, comment, just go crazy. Does anybody have a question? Thank you, Federico. Thank you too for showing up. Wira, I appreciate you too. Thank you for liking my trading style. It's beautiful. I like it too because it's easy, no unnecessary complications, and it has a profitable and proven edge in the market. So it's beautiful. I like it too. But thank you for showing up too. So with that being said, guys, I appreciate you all. I'll see you guys back here tomorrow, same time, where we will be back testing GBP USD. Till next time, guys, appreciate you all. Take it easy out there. Have a good one. Peace.